Tesla closed up about 3% on Friday, which is incredible considering the stock was down about 8% in pre-market because of demand concerns. Yes, Tesla's cutting prices for their vehicles in China, and this has the pot stirring again. Can Tesla remain on their path for 40 or 50% delivery growth in 2023? Guys, we're going to talk about everything you need to know, what happened on Friday with Tesla, but most importantly, what's going to be happening in the broad markets in this next upcoming week with economic data, with the earnings that are going to be coming out. And on top of all of that, we're going to look at the Ortex data with Tesla. What does the option activity look like from institutional investors? What's the short interest? What are the cost to borrow rates? And we're going to talk about the technicals on Tesla as well as the S&P 500, because both of these equities and securities are at a very critical level, guys. So let's get into this video. You guys know the spiel. If you like these kind of videos, or if you just like making money, hit that like button and subscribe to the channel. So let's not waste your time. Let's get into it, guys. So like I said, I kind of gave you the backstory on what happened on Friday. The stock did close up 3%. It would have been a much stronger day, granted, if this news did not come out that Tesla is cutting their prices for vehicles in China. And that is, again, stirring the pot over demand concerns, because Tesla is actually cheap if they grow 40 to 50%, right? If you're buying Tesla right now and they only grow 20% in 2023, well, fundamentally speaking, the company is going to be overvalued even at these current levels. If the company grows deliveries and revenue 40 to 50% along with their actual estimates of 50% that they outline every single earnings call, then the stock is incredibly undervalued, especially if they can do that year after year after year. That's the whole reason to own Tesla. And that's why when you get demand concerns, the stock can fall very aggressively, because there will be no floor for Tesla if their growth slows down. Now, obviously, if you watch this channel, there is like 100 reasons why that is not going to happen and why Tesla pretty much needs to be in your portfolio if you're a long-term growth investor, especially in 2023 when growth is scarce. Now, I don't want to get into this too much. We've talked about it here and there in videos. We're going to make a whole video on exactly this, the fundamentals, why I personally own Tesla, and why I think, like I said, everyone that invests in growth and innovation in the future should also own Tesla, aka I'm not a financial advisor. Now, let's get into what to expect as far as earnings and economic data this week, because it is going to be another big one. And the earnings picture isn't too crazy until you get to Friday. And on Friday, you're going to get the banks. You're going to get Bank of America. You're going to get United Health Corp. You're going to get JP Morgan, Citi, Wells Fargo, Delta Airlines, BNY Mellon, BlackRock, and PNC Bank. So you're going to get some of the biggest banks, guys. Bank of America and JP Morgan, those are the top dogs as far as market cap is concerned. So depending on what they say, especially about the consumer, their spending habits, how healthy they are, is going to move the markets. But again, it's on Friday. Sometimes we get bank earnings on Wednesday and they can affect the markets more, in that same week. But considering earnings are Friday, you might see a big reaction on Friday, but it's going to take some time for digestion. And in this next upcoming week, we're going to get the CPI data, which is going to be the main concern of this week. And CPI is going to come out on Thursday. So it's kind of going to be like a jam-packed end of the week, even though you are going to get some smaller data points that will come out. Like on Monday, you are going to get consumer inflation expectations for December. We are expecting 5.2%. This is the inflation expectations for 2023. If these numbers go up a lot, this could be something that could really crash the markets. Now, I don't expect the inflation expectations to go up, but again, nobody expected the unemployment rate to go down 0.2%, to go down to a record historical low. Nobody expected that, especially after announcement of these layoffs. So again, anything can happen in 2023 like we've seen in 2022. You're going to get some bond auctions pretty much every day of next week, but Tuesday you don't really have anything. Wednesday you don't really have anything as well, and then you get to CPI like I said on Thursday. That will come out as always 8:30 in the morning. The inflation rate year over year for December, we're expecting 6.9%, so anything higher than that obviously going to be negative. Anything lower than that's going to be positive. Now the markets are going to care most about the inflation rate month over month and the core inflation rate month over month as well. And the core inflation rate, we're expecting 0.1% of an increase. This could very well go negative, and that's a big problem here. I kind of worded that funny. If it goes negative, that's going to be huge. That's deflationary, right? At the very least, disinflationary, hopefully, right? If that continues for a couple of months, it could be deflationary. If it's negative for 1 month, that is definitely disinflationary. But we're only expecting a 0.1% increase. So if this comes out at 0.2%, that's going to be a big problem for markets. In other words, the expectations are already that CPI is going to drop pretty aggressively. And the last month's reading for November, the consensus estimate was 0.3% core inflation rate month over month. It came out at 0.2%. So essentially, you were expecting a 50% drop last month, and you're now expecting a 100% drop from last month, right? From the last reading, going from 0.2% to 0.1%. So you're expecting a pretty sizable drop almost in that disinflationary, deflationary environment. So I do think the expectations are pretty low. Not that they can't get beat, but that can sometimes set you up for disappointment in the markets. Now, as well as that, on Thursday as well, you're going to get initial jobless claims for January 7th. These tend to be important, but considering we do have the inflation data, that's going to be the main topic of conversation. And it makes you think about things a little bit different because of the data that we did get on Friday. Because like I said, guys, we missed on the non-farm payrolls. We were expecting 200,000. We got 223,000. Not good. We were expecting a 3.7% unemployment rate. We got 3.5%. Again, not good for what the Fed is trying to do, slowing down or to slow down the labor market and to bring that more into balance. This was not good, right? This is not what they want. This gives the Fed more room to continue to raise rates. And like Fed Bostic said, that's exactly what they plan to do, 50 basis points or 25 basis points. It will depend on the CPI reading that we're going to get next week. And he said this labor report doesn't change anything. That's literally what he said. He said that December's jobs report doesn't change his view on monetary policy. Like, this is, I guess, what they want, right? To keep a tight labor market, to keep raising rates. After all, they can kind of do what they want if people are not losing their jobs. So not good. And the markets rallied aggressively today off of that. So I want to watch out for next week, kind of this digestion of even this labor report that we got on Friday, because it could very well turn out that investors don't like this after they have the weekend to sit on it. So we'll see what happens with all of this. Nonetheless, when you're talking Tesla, when you're talking the markets, they rallied today aggressively from it. And we're going to go ahead and take a look at the key levels for both of these securities, guys. So for Tesla, we'll first start there. You are at a multi-year low. Like, you're not even at a 52-week low. You're at a multi-year low. The stock is down. Let's just for, shits and giggles here, go from the high to where we currently sit. The stock all in all is down about 76%, give or take, from its all-time high. That's a pretty big beating for a company that has 35-40% profit margins, that makes billions of dollars in profit every quarter. That's a pretty sizable drop for high quality growth, and that is because of the demand concerns, because of Elon trying to be the CEO of Twitter and taking time away from Tesla. There's obviously a lot of reasons why the stock is dropping, but nonetheless, the stock is so severely oversold right now that anytime you even bought the stock at the 30 level on the RSI, you have made a lot of money. For an example, let's go ahead and just pull up some examples from the COVID crash. Obviously, we were under 30 during the COVID crash. You obviously made a lot of money there. You were under 30 back here at this low point. You bought the stock. The stock rallied about, what is that, 40, 50%? We'll go and do the percentages here as well. No, the stock actually rallied about 80%. If we go ahead and take a look at the next time, it was March of 2021. And if you bought at the low to the subsequent rally, which was like a month or two later, you made about 40%, give or take, right? We're kind of rough estimating here. Next time it was at that low was in May of 2021. If you had bought the stock when it hit 30 on the RSI, you would have made 129% in the span from May until November of 2021. So it would have been a pretty good ride from there. And really throughout 2022, you've hit the 30 level on the RSI multiple times. Every time you've hit that level, you have been rewarded very nicely, a couple weeks or couple of months after that. And we have never been this oversold with Tesla. You would have to go back to before COVID, and I think to analyze Tesla before COVID isn't even a fair argument, right? Much different business now than it was then. So you've never been so oversold, and that makes the stock really primed for a rally, especially as we do enter 2023, and you're seeing positioning. If Tesla can, like I said, I'll go back to the first thing that I said in this video. If Tesla can grow at 40 to 50%, the stock is severely undervalued at its current valuation. That would mean a massive rally in the stock, but it does have to prove itself. And I do think on earnings, if Elon can reaffirm that 40 to 50% growth target, that's going to be a very positive thing. Even if they come out and say growth could be 40% or 35%, I think the stock has priced in a lot of bad news already. So even at a 35% growth rate, you could be along the lines of fair valuation. We're going to talk about fair valuation. We're going to talk about all of that in another video, in probably the next video. So stay tuned to the channel, hit that subscribe button. You definitely want to watch that one. It will be a banger. It will be very important. But nonetheless, I think Elon will reaffirm that to us on earnings. And then you will see more positioning for 2023 in Tesla stock. After all, earnings is going to be the main story of 2023. If companies, do well on earnings, these stocks are really primed for a massive rally. Some would even say short squeezes across the board, guys. So it looks like the best time in years to buy Tesla stock. In fact, I think it's a known fact that it is the best time to buy Tesla stock that you have seen in years. Now, if we go ahead, take a look at the S&P 500, you are at a very important level on the S&P 500, right? Let's go ahead and zoom in. Just because you're so tight to these moving averages, it's actually crazy, guys. So today you did break out above the 100-day moving average at $385.92. You closed, including the slight drop in after hours, at $387.57, down about 0.13%. You closed well above the 100-day moving average. You intraday broke out above the 50-day moving average as well. So you almost broke out above the 100-day and the 50-day moving average today. And at one point, we were above both of them in one day, which is wild. But we did get rejected at that 50-day moving average. So that is not necessarily a good thing heading into the next week. Even though the S&P 500 went up 2.29%, you can't say Friday was a bad day. But it would have been a little bit better to close above the 50-day moving average, considering that 50-day moving average is right here at about, $388.32. So you were only like 20 cents off of that. So it's not by a big margin, but the fact that you did close above it really to close out the day or very close to it, and then you drop 51 cents in after hours, is not necessarily a good thing. And I think it's because you have CPI, you have bank earnings in this next week. People don't want to get so bullish before CPI, because CPI can really ruin the day, ruin the mood for the stock market. Nonetheless, that is really what is key for the technicals on both of these securities. If you take a look at the MACD on the S&P 500, it is severely in bearish territory as well. If we go ahead and pull up the RSI well off of 30. It's at neutral. It's literally at neutral at 51.93. 50 is neutral. So right now, it's not really bullish. It's not really bearish, even though it does feel a little bit more bullish after the rally that we did see on Friday, guys. So that is pretty much going to be all for this video. Like I said, if you like this video, if you like making money, hit that like button and subscribe to the channel, especially if you own Tesla or you're thinking about owning Tesla, or you trade the S&P, you buy the S&P, or you just like the stock market, baby. Let's do it. Let's go. It's 2023. It's time to make your fortunes, make your mark. If you messed up in 2022, 2023 is a new year and a new you, baby. A new portfolio, or a new chance for that portfolio. That is it, guys. Enjoy your weekends, and I will see you in the next one.